Hey, so if you are a married couple that makes less than $46,000 a year, or a single person that makes under $23,000 a year, there is an incredible program called the Savers Credit that can get you free money on this year's tax return. And if you fall under those income brackets, in this video, I'm going to talk to you about how you could potentially make up to about $2,500 as a married couple and up to $1,200 as a single person. And if you make more than that, you can also still qualify for credits. And I'm going to show you how. So the Savers Credit, I don't think is well understood and it's not talked about very often. And I think when people see an IRS form, their brain just melts. Mine certainly does. And I want to kind of walk through a scenario for the Savers Credit that helps break it down so that you can understand how much money you could potentially make. Now, the Savers Credit is going to pay you for paying yourself in retirement funds. And if you haven't contributed any money to last year's retirement funds, then this video is for you because I'm going to show you how you can take advantage of this offer as long as you put money into a traditional IRA or a Roth IRA by April 15th. Now, I am not your tax advisor, so you should work with your own tax advisor, or if you file your own taxes, check out your own situation. And in the description below, I'll post a link that goes into way more detail than I want to cover on this video. This is really just focusing on some key high level points of what this a potential scenario might look like. So the Savers Credit will give a single person up to $1,000 and a married couple up to $2,000 for contributing to any type of retirement account. But for this, we're going to focus on a traditional IRA or a Roth IRA. And what it does is it will match up to 50% of any IRA contribution you make. So, for instance, if you're a married couple and you contribute $4,000 to an IRA, they're going to match up to 50% so that you would get $2,000 in a credit. Same thing if you're a single person. If you put in $2,000, they'll match up to $1,000. Okay, so let me walk you through the income requirements for the Savers Credit. So, to qualify for the 50%, where in the single person's example, you put in $2,000 and they give you $1,000, you would have to earn less than $23,000. Now, if you earn more than that, you can still get a credit. So if you earn up to $38,000, you'll still get a 10% match for any type of IRA contribution you make. If you're a head of household, which this would be if you're, let's say, divorced and you have a child, you have a higher income threshold. And then for married people, if you earn $46,000 or less as a combined income, then you're still going to qualify. If you earn more than that, you can still qualify for a 20 to 10% discount depending on your income level. Okay, so let's walk through some potential scenarios. Now, this is a 50% credit example, meaning that you had to be earning less than the different thresholds that I talked about in the last section here. So let's say you're a married couple and you're under the $46,000 a year income. So if you put $4,000 into a traditional IRA today, you would get $480 in tax savings because a traditional IRA is tax incentived. Let's say you pay a 12% tax rate today, you get 12% back on your contribution. And so that's 12% of 4,000 is $480. On top of that, then you would get the 50% savers credit, which is $2,000. So you put in 4,000 and they give you $2,480. What's incredible about this is just for saving this money, you will have built wealth up to $6,480. Let me use a single person example. So in a single person, they only match up to $2,000. So, you could put more in if you wanted to, but just to take advantage of this offer, let's just cap it at 2,000. You put 2,000 in, you get 12% of that back and you get a savers credit for $1,000 combined. That's all $1,240. So together, between the contribution that you've made to yourself and the government, you get $3,240 back. Now, the really cool thing about this is that you can take advantage of this right now. So if you have not contributed to a retirement account last year and you haven't opened up a traditional IRA account, you could open one between now and April 15th and make this contribution to qualify for this credit on the taxes that we're filing right now before April ends. A couple of ideas are when you file your taxes, you tell the IRS that this is something that you have done or will do by April. So let's say you don't have this money available right now. This is a pretty low income bracket. So having $4,000 saved as a married couple or $2,000 saved, you might not have that right now. Well, what you can do is work with your tax advisor to calculate how much credit you would actually make by doing this contribution If you file your taxes early and get your tax return, you can get your tax return back and then make the contribution as long as you make the contribution by April 15th. So please, what you should not do is don't not make this contribution, get this money and then not follow through because then, that's no good. But if you tell the IRS, "Look, I'm going to make this contribution by April 15th." You'll get the credit. And then you can use this money to make partial part of the contribution. Let's say you already have put money into a retirement account and you are at these income levels. So if you contribute to a 401k today, you qualify for this. The reason I'm focusing on IRAs is because you can still make a qualified contribution in 2025, the year we're in, or last year, as long as you do it within the next month and a half or so. So I really like the savers credit. It's a great opportunity for people that may make a lower income to build wealth. One of the focuses of this channel is to how can we help regular people? And so you don't have to feel like you're left out if you don't earn a lot of money. And the savers credit is a great thing to take advantage of for someone that falls in these income brackets. Now, if you earn a higher income than what we're given here, you can still qualify for a 20% savers credit or a 10% savers credit. Before I finish this video, let me tell you a few important caveats about the savers credit. So it only reduces your taxable amount to zero, meaning it's non-refundable. So if you were to use this credit to go below $0 of taxes due, they don't give you the difference back. So what's really important to understand is, let's say you only had $500 of taxable income. Well, the savers credit would only apply to that $500, even if you made this larger contribution. So it's just really important that you work with a tax advisor. I'll post another link from TurboTax that helps kind of walk through the different scenarios for your own situation before you decide to do this. So work with your advisor who can help you understand how much taxes you actually have, and if you make a contribution, how much you can reduce to. The goal is to try to reduce your taxes to $0. And so you might not be able to take advantage of this full $1,000 or $2,000 credit depending on your own scenario. This scenario is hypothetical, and it's if you had a taxable amount that would allow you to use the full $2,000 or $1,000. So please be sure to do your own numbers. Don't rely on just my hypothetical example, but do understand that by paying yourself, you are basically getting free money from the government to build wealth. And that is something that I am all about. So it's definitely worth a look if your income is at the levels that I talked about in the previous section. And reminder, if you are trying to do this for your 2024 taxes, you can't make any more 401k contributions. You would have needed to have done that last year. We're only talking about traditional IRA or Roth IRA contributions that you need to make by April 15th in order to qualify for this. And if you don't have a traditional IRA today, not a problem. You can open one at a brokerage. I have a video on my favorite Fidelity cash management account. So you can open a traditional IRA with Fidelity, but there's others. I would also recommend Vanguard or Charles Schwab. Robinhood and Acorns are two other newer brokerages. Cool thing about Robinhood and the cool thing about Acorns is that they are offering a 3% match on your contribution. So if you were to make this $4,000 contribution, they would give you 3% of that as just free credit from them. So you can look into those offers. Either way, I would definitely encourage you to take advantage of the savers credit if you fall in these income levels, and also try to max out as much of your IRA space as you can every year. And again, don't not do this if you don't qualify for the 50% match, because even if you qualify for the 20% match or the 10% match, it's free money and you're still going to have the tax savings from making a traditional IRA contribution in the first place. So I hope this hypothetical example has been helpful to inspire you to want to look at what your own numbers might be. And if you have questions or comments, or you've used the savers credit before, I'd love to hear it in the comments below. And wishing you the best of luck in your wealth building for this tax season.